Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the stock market today? Well, we're having a down day. The Dow's down about 200. NASDAQ's down about 100. Now, it was worse. The Dow was down 400. It cut its losses in half. So we're kind of rebounding a little bit off of the lows of the day. Now, what I want to talk today about is the Golden Cross. Now, I do believe that the stock market is going to come down. About the next move down will be about 20% in the downward direction. So on the S&P, we're about 4,000 right now, a little bit below, but right around 4,000. I think that's going to come down to about 3,200. Now, I do think it is possible that we get to 4,100 first. You see, what we have is called the Golden Cross right now. A Golden Cross is when the 50-day overtakes the 200-day in the upward direction. Now, if it were the reverse in the downward direction, that would be known as the Death Cross. But the Golden Cross crosses the 50-day in the positive direction, going higher. Now, you'll notice that the Dow, the Russell 2000, and the S&P all have the Golden Cross going positive. But the NASDAQ does not have that going positive. The NASDAQ is still in the negative direction. And I think the NASDAQ is what's going to lead us lower. Now, if the NASDAQ were leading the rally, I might agree with some people that think this is a new bull rally. But I do not. I think we're going to pull back about 20%, down from about the 4,000 level on the S&P, down to about 3,200. Now, this is just my take. Your take may be completely different. And that's perfectly fine. Well, let's move over to the real estate market now. All right, now I'd like to start with some good news. Once again, we have good news in the real estate market. You see, the White House is going to fix the housing problem. They released what's known as the Renters' Bill of Rights. Now, basically what the White House wants to do is have a federal rent control. Federal rent control, okay, because they think this will somehow solve the housing affordability crisis. So let's talk about rent control. Rent control doesn't work. What rent control actually does is reduces the supply. Now, a lot of people don't get this. They think that rent control is a good thing. Let's think about gasoline prices. What if they passed a law that said no gas station can sell gasoline for more than $2 a gallon? Now, that sounds great in theory, right? And that's how the White House thinks would be a good thing. Well, when the gas station has to pay $4 a gallon, how much gas do you think they're going to sell at $2 a gallon? Well, the answer would be close to zero. So it constricts the supply. Now, when you put rent controlled market at the federal level, it's going to constrict the supply of rentals available. Now, here's the thing. All right, so in the last few months, rents have been coming down. Month over month, they've been dropping for the last 3 months. And they're down about 4 or 5% from their highs, but they've been coming down. You see, high prices of rent are going to solve themselves because people can't afford to pay the high rent prices, so the landlord's not going to be able to rent the property out to anyone that can afford to pay the high rental costs. So the prices will come down naturally. Now, the government, they want to put these rent controls on to restrict the amount of rentals available to the average person. I think it's a dumb idea. You can voice your opinion in the comment. Now, here's a question I have for you. Do you think that the rental prices will crash the housing market, or that housing market will crash the rental price? Which way do you think that'll play out? Now, I actually believe that the rental prices are going to crash the housing market. Now, why is that? Why is that? Well, let's just take a look here. Okay, so you got rents coming down, right? Now, we talked about this before. There's choices that are being made right now. Now, the buyers, they don't really have a choice, because even if they wanted to buy a house, they can't afford it because the affordability is off the chart right now. So they have no choice. Now, the seller, the seller, they got a choice. They could lower the price down to where the buyer could afford, but the seller doesn't want to do that because they want to get the price that Billy Bob got. But there's a third group of people, and they're called the investors. Now, investors in the last 2 years have been responsible for about 30% of home purchases. 30% of homes have been purchased by investors. Some areas as high as 50% of homes were sold to investors in the last 2 years. But investors now have a choice, right? You see, investors used to get about 5% on their money. They could buy a house and they could rent it out and they could get a 5% return on their cash. Cash on cash return was about 5%. Okay, well, the price to buy the house has now gone up. Mortgages went from 3% to 6%. So this reduces the amount of money that the investor can get. And as rents start coming down, that also reduces the amount of money that investors will make. So they were making about 5% on their money, and they were getting cheap money. They were getting 3% mortgages, and they could make 5%. So they were pocketing the 2% spread. Okay, and institutions, they were getting money around 1%. So the government was just giving the institutions free money, basically, but they had no way to generate income, right? They had no way to generate a return. Well, they looked to the housing market and they said, hey, we can get about a 5% return in the housing market. Let's do that. We'll get the money from the government at 1% and we'll get a 5% return. So that was great, right? They were making a 4% spread. Well, right now they're only making about 2% on their money when they get from the government, and they're not getting the money cheap anymore. It's up to 3 or 4% for institutions. We have to pay 6% because we're just regular people. But my point is the money they're making is coming down. And now the investor has a choice. Well, he could put his money in the rental market and get 2%, and he'd have to manage the properties and have the headaches of tenants, and he'd have all the headaches of management. Or he could just put it in government bonds and get 4 or 5%. So would he want 2% and have to work for his money, or get 4 or 5% and just sit on his butt and watch TV all day? Oh, well, I'd go with the 4 or 5% and just sit on my butt all day, right? Well, that's an obvious place. So the investor is being taken out of the marketplace right now. Okay, so the investor's coming out of the marketplace. Well, that was 1/3 of the buyers. Now, that could explain why buyer demand is dropping off. It fell off a cliff. It's about 40% down year over year. The buyer demand is at record lows, right? It's never dropped that quick, but I will be the first to admit things are still selling. Well, 60% of the activity is still going on, right? We're down about 40% on activity, so 60% still moving. So if you have a house and you price it right, you're going to get out. Now, you're not going to get what Billy Bob got, but you're going to be close. You're going to be about 10% off of that number. But I want to go back to, is it a good time to buy, or should you just rent a house? Well, let's talk about this. Okay, so now in your area, the numbers are probably going to be a lot different than my area. My area, it's insane. Okay, so my next door neighbor, he's now moving, right? Okay, now he was just renting the house next door to me, and he was paying $5,000 a month in rent. $5,000 a month in rent, that's a lot of money, right? $60,000 a year was what he was paying in rent. And he felt that he was just throwing that money down the drain. So he went out and bought a house. Now, he bought the equivalent house, let's say, all right, and he paid $2.2 million. And he came up with $200,000 down, but he's got a loan for $2 million at 6%. Now, at 6%, that loan of $2 million at 6%, I'm just going to go interest only, right? So interest only on that is $120,000 a year he has to pay, $120,000 a year, or basically $10,000 a month. So he went from $5,000 paying rent to now he's paying $10,000. But it gets worse than that. He's got to pay property taxes, right? So property taxes on that $2.2 million, we'll use rough numbers, about $2,000 a month. So he's paying $10,000, right? $10,000 a month plus $2,000. So he's up around, let's call it $12,000 a month. Now, he was renting for $5,000 a month. So he's basically throwing $7,000 away. But maybe in his mind, the house is going to go up in value by more than that. So maybe in his mind, that $2.2 million house will become $3 million or even $4 million, right? That's the only reason it would make sense to buy a house over rent a house, right? So basically what he's not figuring out, though, is that he's paying $7,000 more, that he's paying $12,000 a month. He was paying $5,000 as a renter, so he's losing $7,000 a month, but that $2.2 million house is still dropping, and it's going to continue to drop for another year or two. It's probably going to go down at a rate of about, well, let's call it $7,000 a month. So he's not only losing $7,000, he's really losing $14,000 a month. So in his case, now he decided to buy, he thinks he's doing the smart thing. I would beg to differ. I would say he's making one of the biggest financial mistakes of his life. He should have continued to rent at $5,000 a month. Now, I know $5,000 a month is a lot, and that's throwing money away. Now, your numbers are going to be skewed down, but look, rent right now is about a third cheaper than purchasing in most areas. Maybe your area costs $2,700 a month to buy, and the rent's only $2,000 a month. But its point is that the only time you want to buy, if rents are cheaper than buying by a third, right? Let's use rough numbers, 3,000 versus 2,000. You're renting for 2,000, it'll cost you 3,000 to go out and buy. The only time you want to do that is when houses are going up at such a rate that they're going to make up for the loss. Well, right now they're not going up. Houses are going down, and they're going to continue to go down for the next year or two, no matter what the White House does. Now, I know the White House has this plan to have affordability in houses, and maybe they'll pull that plan off, but I think it's the wrong plan. Once again, you get the government involved in things, it really messes it up. I mean, there's proof of that everywhere you look. The healthcare industry, the college, financial loans for college students. I mean, get the government involved. You can double, triple the price of things. You can really mess things up, but anyways, they're going to make houses affordable. Well, I'm telling you, they're going to make the rents really unaffordable if they put in that federal rent control, because there's not going to be anything to rent. Right now, do you want to be a landlord? Come to my area. Buy a house for $2.2 million and then get $5,000 in rent. How many people want to do that? If you do, raise your hand in the comments, because I'm a real estate broker. I'll sell you that house, but it's not a good investment. I mean, an investor would be crazy to do that, right? But yet that's what they want to do. They want to put these rent controls in to get more investors to go out there and do this. No, the investor, once the rent control goes in, he goes away completely, right? Because it doesn't make sense for him, and you can't blame him. So that places that are going to be available for rent are going to be just falling. But don't worry, rents are going down. I do believe that rents are going to continue to go down, not because of rent control, but because people cannot afford to pay the price of the rent right now. So I think the rents are going to come down, which is going to take the investor out of the marketplace, which is going to take away a lot of the buyer demand for homes, which is going to send the home prices a lot lower. Now, this is just my take. Now, I don't want to offend you, because I know in your area that prices are still going up, and I get that. Your area is very strong. In my area, we're down about 20% in prices already, and about 40 or 50% in activity. That's not good. And we're still circling the drain. We're not done yet. To sit out 2023, 2024 is where the opportunities are going to happen. And there's going to be opportunities. Now, if you like this stuff, give me the thumbs up. Why not? It's a Wednesday, everybody. Get out there. Have a great Wednesday. Hit the subscribe button so we can talk some more later in the week. A lot of stuff going on. Tesla's announcing earnings after hours today. That's going to move the market one way or the other. I'm not even sure which way. Anyways, get out there. Have a great Wednesday, everybody. Bye-bye now.